There's two things in this world that probably put me to sleep the most is taxes and insurance. But they are very important when you're buying a house. And today in this video, we are going to be talking about the 3 different types of insurance that you're going to need when buying a home. Coming up. Hey, welcome back to the channel, you guys. My name's Jason with Greater Nixa Homes, and on this channel, we talk about all things real estate from Nixa down to Branson. So if you're new here, consider subscribing. Taxes and insurance, right? It's just one of those deals that kind of makes you just go, nobody really likes to want to learn about any of this stuff. I don't like talking about it, but it's got to be talked about. A lot of that stuff that's in your closing costs is all the different insurances and all the papers that you sign at the closing table basically is just a repeat over and over again. Yes, I will keep insurance on my property at all times. When you're buying a house, the main one that everybody obviously thinks about is homeowners insurance. This is the insurance that you will need for the house, the structure itself, in case something were to ever happen, an act of God were to wipe that off the face of the earth. It could be rebuilt, you'll get a check. It will cover all of any other accidental things that happen, damages to your house and other property, including even like your personal property that's inside of the home. Okay, so there's 4 different things that you should just kind of be aware of that are included in your mortgage payment, and that's your principal, your interest, your taxes, and your insurance. Principal being, the actual payment of your loan. The interest is the cost to acquire that loan per year, will stay the same or it could go up. And then your taxes could definitely go up. And then your insurance is not just your homeowner's insurance, but you might have what we're going to talk about next is private mortgage insurance. And this is something where, it's kind of a love-hate relationship with home buyers, right? You can't live with it and you can't live without it. Most people, don't have 20% to put down on a house. And so if you aren't able to put down 20%, then your lender is going to require this private mortgage insurance up until, the home increases in value to where you have 20% equity in the house, or you've paid the loan down enough where you have 20% equity or more in the house. So if you put 15% down, then you can very quickly pay off 5% more of that loan. And as the market is also appreciating while you're paying it down, you're going to split that difference. And then you can drop the private mortgage insurance on most loans. There are some loans that never goes away regardless of how much equity you have in it. So just kind of know that they're to be able to give you the opportunity to buy a house at 3% down, 3.5% down, or even 0% down. There's a cost of being able to do. There's a risk for that lender if they're all in or 97% of the way in on that loan, on that house that you're buying, they're going to require that mortgage insurance. So the last type of insurance that we're going to talk about is title insurance. And again, if you're getting a loan, your lender is going to require title insurance. They have a lender policy that you're going to have to purchase, which will be included in your closing costs. And then, you have your owner's policy, which, that's optional, but I definitely recommend that because, title insurance, a lot of people ask me, why do you need title insurance? Well, let's just say that you bought a house from somebody that maybe claimed that they were the seller, and turns out they weren't actually the owner of that property. Maybe they thought they were. For the longest time, it had been handed down to them, and that not all the chain of the paperwork didn't ever really get filed with the county the proper way. And so the title company is going to pull all of the records, and basically they're going to make sure that you have what we call clear title, or that it doesn't have a clouded title or defects in the title. And this will ensure, especially if you're getting a loan, again, your lender has interest in this property up until you pay off that loan. So your title insurance will protect them, make sure that nobody else can come take that property away from them, but also away from you as your owner's policy. So if somebody comes back and says, my granddad bought this land back in 1895 and it belongs to my family, well, then should something arise in the future where there's a claim against your property, then your title insurance will stand in the gap for you there to make sure that you can continue to own that property. So I hope that it kind of clears up the 3 different types of insurance. Leave me some comments down below if you have any other questions about insurance, and I'll try to answer those here coming up this week. Until then, thanks for watching, you guys. I'm Jason with Greater Nixa Homes, and I will see you in the next video. Take care.